So here on the slide, LIC is much bigger than its peers. So this slide speaks about the size of LIC and how big it is in comparison to its peers. So if you look at the new business premium, LIC's new business premium is 9 times larger than its second largest peer. Also, if you look at the individual policies sold, LIC's individual policies sold is 11 times higher than the next largest peer. So that is the kind of size that LIC commands. Also, in terms of the AUM, LIC's AUM is 15.5 times larger than its closest competitor. So that's about the size. If you also look at the renewable book, LIC has a very strong renewal book, which means the policies that are taken by LIC policy holders continue to remain on the books, and the persistency of those renewals are not very low. So if you look at the persistency ratio, 61st month persistency ratio in particular, LIC's 61-month persistency ratio is 62%. This is in comparison to 50 to 53% for its peers, which means after 61 months, 62% of the premiums that were taken still exist on the books of LIC, which is a very strong number because you need that renewal to continue in order that the policy goes on for a longer period of time and LIC continues to earn that kind of a premium. So that is one thing. And lastly, the reinsurance ceded, which means if you have taken an insurance and you do not have enough of net worth, you need to give back that insurance or you need to reinsure that with the reinsurance company. So LIC does very less of the reinsurance. So the LIC does a reinsurance of only 0.1%, which compares with 2.1% for the private sector peers. So lower the number is better in this case. Having taken a look at the lot of the positives that LIC brings on the table, let's take a look at the negatives from LIC. So if you look at the growth, LIC's growth is in single digits, both if you look at the near term or if you look at the long term metrics. So 11 to 21 CAGR is just at 7% and 15 to 21 CAGR is also at 9%. So it's in single digits. And if you see the market share has been declining. So post FY14, there has been a constant decline in the market share of LIC. And you compare the near-term and the long-term growth metrics with the private sector. So if you look at the 15 to 21, LIC has grown at 9%, but the private insurance companies have grown at 17%. So that's like double the growth of LIC. Now, if you look at the high market share that LIC commands, which is 64%, and you compare that to the global companies, so there's no country wherein the market share is more than 25%. So it's only in India where LIC is having the market share of 64%, and this was more by design because until 2000, private sector companies were not allowed to enter the insurance segment. So it's only the private sector companies have been in existence now only from 20 years, but LIC has been in existence long since. So that is why LIC is having 64% market share. But insurance industry is a very capital intensive industry. You need a lot of employees. You need to do a lot of work in order to gain a sizable amount of market share. So we believe that this market share, which was artificially high till 2000, that market share can correct going forward. So while the market share has been declining, we believe this market share can continue to decline further, taking a cue from the global peers as well. If you look at the solvency ratio, LIC solvency ratio is the lowest among all the peers. So solvency ratio is also an important metric because higher the solvency ratio, better is the chances of growing as well. And secondly, the equity market volatility does have a much higher impact on LIC. We will see it in subsequent slides. So higher the volatility of the equity markets, that much will lead to an impact on the solvency also. So when markets had corrected in March, a couple of years back, LIC's solvency had gone as low as 1.56, and that is very low because you need to have a minimum solvency of 1.5%. Now coming to the cost. So if you see, we had discussed in the earlier slide that LIC has a very strong agency network. It has built its entire model on the agency network. But this agency network is not a very efficient method of in terms of the cost structure. So if you look at the other players, most of the other players have banker as the main channel from which they source the premiums. So an banker is nothing but a bank distribution-led model, wherein you utilize the banking network in order to sell the policies. So the banking network is much more efficient, and the cost of acquisition in the banking channel is much more lower compared to an individual agent, which is why LIC is operating on a much higher cost structure. So that is one negative. If you also look at the OPEX, if you also look at the commissions GWP, the commission GWP for LIC is on the higher side at 5.5%. If you compare that to the peers are in the range of 3 to 4%. So the higher commission expense is also because of the fact that LIC has a much higher higher cost structure led by the agency network. If you also look at the total commission plus OPEX, which is the total expenditure as a percentage of the premiums, LIC is still on the slightly higher side. Now, considering the size of LIC, this number should have been much lower. But this number is not materially lower for LIC. So that is again one negative, because LIC is not able to get economies of scale. Again, because it's largely based on the agency network. If you look at the last 5 years commission to OPEX ratio and how that has trended, you will see that in the case of the private players, this number in FY16 was 20.7, which has come down to 16.9. So there has been a material improvement in the commission plus OPEX ratio. But in the case of LIC, that number is flat. It was 14.3% in FY16, and presently also it is at 14.2%. So LIC is not able to improve on its cost structure based on the increasing premiums. However, the private sector industry is able to improve on this structure, and going forward, this number is likely to be better for private sector. So they may actually end up being more efficient compared to LIC. Also, in the premiums to sum assured ratio, also LIC is having a market share of 64% in terms of premiums, but in terms of sum assured, the market share is only 18%. Again, this is reflective because the policies that LIC sells is slightly on the higher side, and also partly because of the mix that LIC has. Yeah. The next slide, the LIC's products are low margin. So if you look at the largest segment, which is the participating products, for LIC, that is at 61%, and this is basically participating is nothing but the policyholder gets to take a part of the profits. That's why it is called as a participating policy. So the shareholder does not be part of the profits. So that's why these margins are the lowest. But LIC has the highest mix in the lowest margin segment. So that is also a negative in terms of the product margins. And if you look at the pure protection plans, they have the highest margin. It's a pure term cover. They have the highest margins. But LIC has just 0.6% in that segment, whereas all other players are anywhere between 10% to 20% range. So that is where again LIC falls back. And these things have dragged the margins for LIC. So the value of new business margins, that is just about 10% for LIC, whereas it is anywhere between 20 to 25% for the other players. In terms of the ROEVs also, which is an important metric it's similar to ROE, but it is an ROEV, which is returns on embedded value, which is an important metric on base of which you get the valuations. So for LIC it is only 10%, but for the other players it goes as high as 20%. So the ROEVs are also lower for LIC. Then if you look at the sensitivity, the embedded value is a very important metric based on which the valuations are given. So the sensitivity to embedded value should be the least. But in the case of LIC, if you just look at the equity market movement for every 10% reduction in equity markets, LIC has a sensitivity of 6.7, which means LIC's embedded value is likely to decline by 6.7% for every 10% reduction in equity markets. This is a very important number, and this can actually lead to a higher volatility in your embedded value. And in relation to the other players as well, LIC's embedded value is likely to be more volatile, which is likely to reflect in lower multiples. And then LIC also changed its surplus policy in March, because of which there are certain changes which have happened. Earlier, LIC used to operate on a single pool, but now LIC operates on two separate pools for participating and non-participating products. One key thing to note in this is that LIC in the participating products used to offer only 5% to shareholders, which will now increase to 10%, which means it will be less attractive from a policyholder's point of view. So the unattractiveness in the policyholder's point of view is likely to have an impact on the future growth prospects. Yeah. So let's sum up. We will sum up on why we like LIC, and then we will tell you the reasons or our concerns. So, firstly, trusted brand. Insurance is a sector of trust. We always want to put our premiums in companies where we place our faith, and we know that in case of any adverse impact, we will get the money back, or our relatives or our loved ones will get the money back, and they should not suffer. So that's why we will always place our premiums in a company which is trustworthy. So LIC scores very highly in that regard, being a government organization as well, and being in the business for a very long period of time. Secondly, the industry is also a growing industry, so the penetration levels are just 3.2%. So growth of the overall industry is also likely to help LIC grow its book. Next is the size of the company. The size of the company is very large. It's the 5th largest. It has a huge scale. It has sold 21 million policies in FY21. It has a very high AUM of rupees 40 lakh crores, and has a very strong distribution network led by its agents. So that is also likely to keep LIC in good stead and help it to grow its book at a steady pace going forward. Productivity of its agents is also very high compared to its competitors. The persistency ratio, again, as I said, that the higher the persistency ratio, it is better, because you will be able to, your policies that someone has taken will continue to remain with the books in the books of LIC for a longer period of time. LIC has one of the highest persistency ratios in comparison to the peers, so that is also a very positive thing for them. And it sells down. The reinsurance ceded is very low. That's how it is able, whatever policies it acquires, it is able to retain on its books and earn as much as possible from that. Then the company is also the IPO is also very attractively priced. So currently it is at only 1.1 times September numbers. So even if you extrapolate it to March numbers, this valuation can be probably at 1.05. So if you compare that to the listed peers are trading anywhere between 2 to 3.5 times on an FY22 basis. So there is a huge valuation discount which is there when it comes to LIC. And also there is a possibility of it getting included in key indices such as Nifty and MSCI. Of course, in the current IPO, the float is very low. So since the free float is very low, it is not going to get included in LIC. But in the future, when government comes to sell their shares in the future, the free float will increase, and it's possible that LIC can get included in the Nifty and Now, what are the concerns? Why are we concerned about LIC? Is that it's a slow. The growth in LIC is very slow. Although the industry is growing well, but the industry growth is largely led by the private sector players. So LIC in comparison to that has not grown, or rather the growth rate is half of what the private players are growing at. So this kind of trend, it's possible that this kind of trend may continue going forward as well. Secondly, the cost structure is a concern. The LIC has a very high cost structure, because of which it needs to price its premiums also slightly more aggressively. So it is not very the premiums that LIC places is not very competitive compared to its players, because of which it is also losing market share. So it needs to actually shift its mix from pure agency-led model to having a mix of a branch-led distribution model as well, so that it's able to reduce the cost structure. It has the products that are there are low margin, so 61% of them are participating, wherein the policy holders get bulk of that returns. It's not the shareholders which get the returns. So that is one thing where LIC needs to shift its mix from participating products to non-participating products, where the shareholders are able to get more of the business. VNB margin, the value of new business margin, is also very low. It's only at about 10% versus an average of 25% for players, and ROEVs are also low in comparison to peers. Also, the EV embedded value is likely to be more sensitive compared to peers for any adverse equity market movement. And finally, the government is also likely to reduce stake going forward, because they need to bring down their stake to 75% over the next 5 years. So currently 100 has gone to 96.5. 96.5 needs to go back to 75%. So this selling of just 3.5% itself is a huge number in terms of quantum. So you need that much of liquidity as well. So future a continuous supply from the government could actually put pressure on the stock price. So these are the concerns. So just to conclude, what we think in terms of near-term prospects and in terms of medium-term prospects, long-term prospects, I'll just give you a view. So from the near-term position, we believe that most of the concerns are adequately priced into the stock, and the IPO is coming at a very reasonable valuation. So definitely we see 5 to 10% increase from the current levels. In addition, if you are part of the employee or the policyholder or the retail group, there is an additional 5% discount which is there on offer. So you can actually end up making around 10 to 15% from a listing gains or a near-term perspective. However, over the medium term to long term, we believe that the challenges are still present with LIC. In terms of business model, they need to reorient their business model, they need to reorient their mix, they need to reorient their agency network and the cost structures. All of this is not going to be very easy, and we would also need to monitor how the movement is over the next 2 to 3 quarters. So until then, we are not we would stay away from a medium to long term perspective, but from a short term perspective, we believe it's worth subscribing to the IPO. So just to show you, the category-wise discount and the combinations that are allowed. So if you see in the employee category, the maximum bid limit is 2 lakhs. In the policyholders and the retail category as well, the maximum bid limit is 2 lakh rupees. You can get in maximum three categories. For example, if you are an employee, if you are a policyholder, you can apply in both of these categories. In addition, you can apply in either the retail or the non-institutional category. So that's the third category which you can apply. So if you are just a policyholder, you can apply definitely in the policyholder account, and you can apply in either the retail or the non-institutional category as well. So you can apply in 2 of the categories if you are only a policyholder and not an employee. So this is the kind of combinations that under which you can apply in the IPO.
Thanks so much, Franklin. That was very detailed insight. And thank you everyone for staying back. So we'll just stop the presentation now and move to the Q&A. So I will just take up. So whoever has any questions, please feel free to questions in the chat box. To take the questions from there. So I'll be reading out questions. wherever there are any technical stroke micro questions, I'll hand it over to Franklin. So, yeah, I mean, this question we answered, but Mr. Sunil Kumar is asking what the weakness of LIC. So we mentioned the slow growth rate. They've been growing at sub-industry, the private players. That's clearly weakness. Weakness number one. The ROEV is also not great, which is the return on embedded value. That's also lower than the industry average, and they have a lot of scope of improvement there. So when you broadly, according to us, when you look at the even though the space is interesting, which is the insurance space, penetration very low and should go up. That's a tick. Management may be neutral. We're not saying it's a tick or a cross. It's more like a neutral because end of the day, it would be classified as a PSU, and multiples would be only around that are given for PSU company. Coming to the business, as I said, the growth rate and the ROEV is not great. So yeah, this is how I would like to sum it up. Okay, yeah. So as Franklin concluded, I'll just repeat that. That's a question from Mr. George as well. ये सब तो ठीक है. Finally apply करना है कि नहीं? So for all of you who asked this question, so broadly, the way things are looking, and we had a surprise policy rate hike today from the RBI, probably preempting what's going to happen tonight in US. I guess the listing may be the listing gain may be if the sentiment continues like this till about 2 weeks from now. By then the to get listed, possibly about up to 10%. Yeah, so and if you get another 5% discount basis any category that you apply, so maybe about 10 to 15% upside can be expected. But again, there is no the market's not in a space right now where these are protected, right? So, but yeah, you can take your chances. There's no harm. Flat to moderately down, there is no reason why it cannot go up or pull back and recover all of that. Again, end of the day, it's not any other company. It's the end of the day, the largest private the public insurer in the country, with almost 2/3 market share, and in a space which is going very fast and very attractively valued, 1.12 times. Right, all others are 2.5 to 3 times. Right? Yeah. P ratio is not looked at really here, but it's price to embedded value. Yeah, that is what you should look at, Navish. Not PE. Price to embedded value is what you should look at. That's what the insurance companies are looked at. Mr. Suresh is saying, unlike PSPs and PSEs, LIC performance is oriented in customers. Will the stock price reflect the manner? PSBs and private sector banks get valued in the market. LIC is oriented on end consumer. So they are now shifting. So as Franklin explained, they are now shifting from being from that having a larger focus on policyholders to now also shareholders. So maybe Franklin can again elaborate on that. What I'm trying to do.
Yeah, so all these years they had a single pool, and they were, because since government was the shareholder, they did not focus much on shareholders. They only focused on policyholders. That's why they had a single pool wherein only 5% of it was given to shareholders. Shareholders used to be part of just 5% of the profits. 95% of the profits was going to policyholders. But now, since they realize that it's important and they're coming to the market and it's important to focus on shareholders, they have now said that 5% pool which is there, first that 5% is going to increase to 7.5% next year, and 7.5% is going to increase to 10% the following year. So that 5% itself is going to increase to 10%. So shareholders will now get 10% of the profits in the non-participating pool. So that's how it is. That's how they are trying to enhance shareholders' interest. Plus, they have realized that the segments where they are present, those margins are very low, but they have a very high share. So they are trying to increase the focus on the high value businesses, high margin businesses. That is one segment. Like ULIPs, they were not present. This was very negligible, but they have grown on a year-on-year basis. They've grown 300%. It doesn't move the needle because it is still very small, but this is the intent with which they are going, and we need to monitor this at least another 2 quarters, 3 quarters to see how the progress happens.
Yeah, questions around long term, whether to apply for long term. Yeah, so as explained, we will get an opportunity post listing as well. So one can wait and evaluate that once it gets listed. Because by then the fourth quarter result will be out, the full year result will be out, the new embedded value will be out. Market would be a little more stable stroke, in a different tangent. And I'm talking about, let's say, a month from now, when all these things would be there. Hopefully, we'll be out from that zone of high inflation, the war conditions, etc., etc. So we'll get long-term investment करना है तो obviously थोड़ा और देख समझ के करना चाहिए. So therefore, no harm in waiting it out and re-evaluating after a month or right after it gets listed. No hurry right now. कितने लॉट के लिए अप्लाई करना चाहिए purely depends on your risk appetite. 10 to 15% upside can be seen listing in, including the discount that one is getting. And just want to highlight 2 things. One is obviously there were speculation of a size, but the reality was that the issue was never supposed to go beyond $10 million, which is roughly 10, even 10 is like an uppish, let's say more like a 9, so which is more like a 65,000 crore size, right? And even that the valuation was coming, I think more like a 1.5 or more times when it was being spoken about, right? Like a couple of months back. Now are lower, right? You have a IPO size of 1/3, which is about 21,000 crore, and the price to embedded value that's more like a 1.12, so which is quite more attractive. So clearly, and basis the anchor investors who invested, 3/4 have been invested by the domestic funds, the who's who of the mutual funds of the company. Most of the large names, sovereign funds, some Singapore-based funds, that shows and some of those or most of those are long-term investors. So another thing that I can share is that based on whatever limited information we have so far, it looks like there will not or there should not be any fresh supply in the next 12 months. So the new agla jo supply aayega next 3%, 4%, 5%. Wouldn't be out in the market in 2022 for sure, right? That's our analysis so far. The next supply would come only in some part of 2023 calendar year 2023. So till then we'll have that room where the price could move accordingly. Yeah, that is something I can definitely share. Yeah, I'm just trying to read out the questions. If LIC is showing slow growth, into Varna recover to LIC, we expect 15 off in a year. But we're not recommending LIC. We're just saying 2 things. One is you should do your own analysis, talk to other investment advisors, and then take a call. Prime of it looks like a 10 to 15% upside basis listing gain, including the discount that's being available. Second, we're saying for a long term, one can wait. One should wait and let the company get listed and then evaluate whether to buy for long term. Yeah, that's broadly please feel free to write to a customer service desk for any service that or if you're not getting a reply, please write to us. We'll request someone from our team, the digital team, to drop in the customer service email ID in the Dropbox for people who have any queries or have not got any response. So there's no reason why, or even the customer service desk is available. Will the RBI rate hike impact the LIC IPO? Yeah, that's interesting. Over to Franklin for that. Yeah.
So in the sensitivity analysis, if you see interest rates increase, for interest rate increases, it moves by just about, embedded value moves by just about 20 basis points for LIC. So LIC is very, very secure when it comes to any interest rate increases, because it has a very high persistency. So that is one of the reasons why the interest rates increases are not likely to impact LIC in that sense. It's only the equity market volatile equity market drop which is likely to impact LIC's embedded value become high.
Okay. Thank you for that. How to apply? Yeah, you can you'll have to approach your broker. They will be able to assist you. I guess that's. I'm just checking for any markets falling. Will it affect on listing? Yes, definitely will have an impact on the listing. But listing is still another almost 20 days away. So we have 5 days before the issue closes, and another roughly 2 weeks thereafter. So hopefully things will be a lot better till then. So the impact may not be as huge as one may think it is today. Yeah. If after listing the rates fall, and can we purchase? Yes, why not? Yeah. If we're getting at even attractive price, that could be an opportunity. I'll reply in Hindi for one last time at the end. Just looking at will policy holders have the possibility the IPO will be allocated? Yeah, so there's a demarcation. There's a separate allocation for policy holders. And a very high chance that one will get allocated, will get the allocation. So it will be applying there, and after that in a retail or any other category. That may be a better thing. There was a question that will IRC perform like IRCTC, which is I'm trying to understand what you mean by that. Means that it will go up by like a rocket and then maybe flattened out. Maybe not, because this is even though the monopoly is the same, the monopoly here in insurance is getting challenged by other private insurance players, unlike in IRCTC, where railways, what the ticketing they do for railways is a monopoly will remain a monopoly unless the rules change, and there's no private players entering that space. I mean, there are obviously those market intermediaries, so travel agents, but at the end of the day, but still, it is a very, very dominant market share with IRCTC. And obviously the return matrix there and other ancillary business and so many other things, return equity makes it so much more attractive. So looks difficult. Short term, it's very difficult. On LIC IPO, same will happen. Reliance powered on market gone. Doesn't look like to us at least. One of our viewers has that view stroke question. Mr. Parik Brothers, don't think so. The market is totally different right now. It may correct. Obviously, it may correct. It may have that volatility in between. But we've seen the statement multiple times in the last 1 year. Whenever the big IPO was coming, when Paytm was coming, when Zomato was coming, many other things. But market has definitely corrected from the top, maybe 10% or maybe slightly higher. But then it's nowhere giving a signal that it's going down like crazy. Just take the last few questions. Yeah, thanks. Thanks all of you for whoever is like the webinar stroke live chat that we presented to you. Yeah, you can apply for both. One can apply both as policyholder and a retail investor, right? Yeah, one can do that. Yes, you can do that. You will get you get a get allotment in both the categories, or it's in both the categories. Yeah, assume it is undersubscribed. Yes, you will you get categories in both the categories. So let me just look at a few more questions. Yeah, I mean, this I've answered, but let me just request Franklin to give one more shot. After listing, if rates fall, should one purchase?
Yeah, so we believe the fair value for this stock is somewhere around 10% higher from the current listing price. So definitely, if there is a correction in the price, then one can look at purchasing the stock, since the upside starts increasing.
Okay. Yes. That's for that. The question. Yeah, I guess I will take. I will. Yes, sir. We will improve our sound quality system, Mr. Sarang, Dr. Sarang Pandit. We've done multiple such sessions. It's the first time we're facing it. Yes, thank you so much for the suggestion, and we will definitely look. Yeah, you understand the branding. Yeah, well taken. These suggestions well taken. Yeah. Anyone desiring to know about our services, I would you suggest request you to just go to our website www.researchandranking.com, and all the details are available there in terms of all our three or more products. The flagship product 5 in 5 MPO, mispriced opportunity, and it's for long term investors. And we are not into trading, we are not into FNO, we are not into speculation. So yeah, that's not the audience. We are really sorry, we would not be able to take stock specific questions. Which are listed. If you have any other question, please write to us. And if I was to client, we're more than happy to reply to you all. For long term, okay. In final, to conclude, and this time in Hindi for all the audience who's there, who wants to listing gain, यहाँ से 5 से 10% से ज़्यादा एक्सपेक्टेड नहीं है आज के माहौल में. कल को अगर मार्केट्स अच्छी लग रही हैं, स्टडी हो जाती हैं, रेट हाइक इज लार्जली बिहाइंड द गुड पार्ट इज कि आज जो रेट हाइक आरबीआई ने कर दिया है और फेड का भी जो भी वो डिसीजन वेदर इट इज 25 or 50, वो भी एक तरह से बॉटम बना देना चाहिए, बिकॉज लार्ज पार्ट ऑफ दैट रेट हाइक जो हमारे ऊपर मंडरा रहा था, जो रिस्क था वो खत्म हो जाएगा कल के बाद. उसके खत्म होते ही जो एक ही रिस्क रह जाएगा वो वॉर रिलेटेड है, वो भी होपफुली इन कपल ऑफ वीक्स उसका भी क्लैरिटी आ जाएगी, और उस पर भी अगर वंस थिंग्स सेटल डाउन तो उससे रिलेटेड जो इन्फ्लेशन बढ़ रहा है वो भी उस पर रुकावट आ जाएगी. तो कंसिडरिंग ऑल ऑफ दैट, आई थिंक 5 से 10% अपसाइड एक्सपेक्ट करना इज नॉट बीइंग अनरियलिस्टिक. बहुत ही प्रैक्टिकल चीज है वो. एंड अगर 5% और अगर डिस्काउंट मिलता है थ्रू व्हाटएवर डिस्काउंट्स इन द रिटेल या जो भी कैटेगरी में अप्लाई करें, सो पुट टुगेदर 10% और मोर ओवरऑल अपसाइड की गुंजाइश एक्सपेक्टेशन जरूर की जा सकती है. लॉन्ग टर्म के लिए मैं जैसा मैंने बोला कि अपॉर्चुनिटी बाद में मिलेगी, लिस्टिंग के बाद मिलेगी, क्योंकि तब तक 4Q के रिजल्ट्स आ जाएंगे, नया एम्बेडेड वैल्यू का वैल्यूएशन आ जाएगा, ओवरऑल मार्केट काफी अच्छी स्टेबल हो जाएगी, होनी चाहिए, राइट? एंड देन यू कैन टेक अ कॉल, बिकॉज लॉन्ग टर्म इन्वेस्टमेंट के लिए ऑब्वियसली वन शुड टेक a little more time, ज्यादा समय अगर आप के लिए आप इन्वेस्ट करना चाह रहे हो तो ज्यादा समय आप उसको एनालिसिस कर पाएंगे, तो अगले 2-3 हफ्ते हमें उतना टाइम और मिल जाएगा वो करने के लिए. Yes, so that is broadly the conclusion from our side. Yeah. Thank you so much, Mr. Rajan Sharma, for the suggestion. Yeah, well taken. We'll forward that to our techies, and hopefully, and we promise this glitch will not repeat in the future. With that, I would like to say goodbye and thank you to all of you for staying with us for so long, and good luck with all the future investments. Again, for any of our offerings, please हमारी वेबसाइट पर जाइए, आपको वहाँ पे और डिटेल्स मिल जाएंगी. So a big thank you to all our marketing, digital and backend team, and to Franklin, who's done such a detailed work in analyzing it and putting it on आपके सामने presentation share करने के लिए. Thank you so much, and